Hi, this is Rakesh and welcome back to one more accounting video. So in this video what we are going to do, we will see the remaining two methods for the valuation of goodwill, right? In the previous video we have seen these starting two methods for the valuation of goodwill, right? And now in this video we are going to cover method third and fourth, right? So let's start the video. Okay, so I'm going to delete all this data and let me write the required data which we will be using in method third and fourth. So we need actual average profit, and our actual average profit was rupees 80,000. Then I need super profit, and super profit was rupees 20,000, right? Now rest all data I am going to delete. So we have these two information now, actual average profit and super profit. So now let's see method third and fourth. So before we discuss on method third, first I am going to cover method 4, capitalization of average profit, right? So in this what we will do is step 1. Step 1 is what? Actually we need to calculate a capitalized value of actual average profit. Capitalized value of AAP, actual average profit. First we need to calculate that, right? And to calculate that we need two information, AAP and a normal rate of return. So our actual average profit was rupees 80,000 and normal rate of return given is 10%. Now how to find this capitalized value? So first we should know what do we mean by capitalized value. Capitalized value means, in simple word, if I want to earn this 80,000 at the rate of 10%, how much money should I put in the bank? Right? Remember again, if I want to earn this 80,000, which is our AAP, at the rate of 10%, this much earning I want, and the rate of earning should be 10%. So how much money should I put in the bank so that I can earn 80,000 at the rate of 10%? So that money is known as capitalized value, right? Now how to calculate that? So for that what we will do, we will take our AAP formula. Let me write here formula. AAP multiply by 100 and divided by normal rate of return. So this formula will give us that money, that how much money we should put in the bank in order to earn this 80,000 at the rate of 10%, right? So let me apply this formula. 80,000, our actual average profit, multiply by 100 and divided by this 10, normal rate of return. So we need to put 88 lakh rupees. So that is known as capitalized value AAP. This is our first step 1, right? Now we need to go to step 2. In step 2 what we will do? We will compare this capitalized value with the actual capital employed, right? So we need two things, capitalized value of AAP, which we have already calculated, 8 lakh rupees, and then we need actual capital employed. Actual capital employed. So our actual capital employed we have already calculated, it was 6 lakh. Assets minus outside liabilities. So assets value was rupees 7 lakh minus outside liability 1 lakh. So our actual capital employed was rupees 6 lakh. So now I will compare this, and the difference is the amount of goodwill. So 8 lakh minus this 6 lakh. So this is the value of goodwill. Okay, now what is the interpretation? Why we call it goodwill? So very simple. Please pay attention what I am telling. See here, in my business, how much money I invested? 6 lakh, right? In the firm, capital employed is 6 lakh. And firm is already giving me actual average profit, how much? 80,000. It means I am earning 80,000 by just investing 6 lakh rupees in the firm, right? But if anybody wants to earn same amount of 80,000, how much money they need to put in the bank? 8 lakh, right? So it means I just invested how much money less? 2 lakh rupees. So that is the value of goodwill. Now we will see the third method, capitalization of super profit. So in this third method, what we will do, we will just calculate the capitalized value of super profit, and that capitalized value itself is the value of goodwill, right? Third method, we don't need to compare the capitalized value with actual capital employed, right? So what we will do in the third method, we need to calculate capitalized value of super profit, right? So that capitalized value itself will be the amount of goodwill. So we need two things: super profit, that is 20,000, and then we need a normal rate of return, that is 10%, right? And capitalized value, I already explained that if we want to earn this 20,000, how much money we need to invest in the bank, assuming that bank will be giving me 10% return. So that is known as capitalized value. So super profit multiplied by 100 divided by normal rate of return. So that will be the amount of goodwill. Okay. So super profit 20,000 multiplied by 100 and divided by 10%. So this is the amount of goodwill, 2 lakh rupees. Right. So this capitalized value itself is the amount of goodwill. Here we don't need to compare this capitalized value with the actual capital employed, the way we did under method 4. Got it? So we are done with all our 4 methods, and I hope you guys understood how to value the goodwill using these 4 different methods.